Russia's invasion of Ukraine creates severe threats to the global economy, which has yet to recover fully from the pandemic shock. The war appears to be Europe's most extreme conflict since 1945. As civilians fled, Russian forces launched extensive airstrikes, overtook army bases, and pushed into Kiev. Western authorities have warned that the capital might fall at any time, as its air defenses have been dismantled. Western nations are taking actions to condemn Russia as Ukraine conflicts for survival. They are cautious that doing so may worsen the conflict's impact on their economy. Hey, welcome back to Economic Insiders. Give this video a big thumbs up, and don't forget to subscribe to this channel. It's free. Now, let's move on. The epidemic has left the global economy vulnerable in two ways: rising inflation and shaky financial markets. The invasion's aftershocks might potentially worsen both. The attack came after weeks of tensions that had already sent tremors across the global economy by driving up oil prices. On Thursday, everything escalated. Oil briefly surpassed $100 per barrel for the first time since 2014, while European natural gas increased by up to 62%. Higher energy costs will increase business costs as well. Airlines will pay more for jet fuel, potentially leading to higher flying costs, while firms that use a lot of power, such as steelmakers, would be strained. This might have a knock-on effect on the economy. Global food costs had already reached a 10-year high. Now, the Russia-Ukraine war may inflame the situation. Russia is the world's leading wheat exporter, while Ukraine is a major wheat and corn exporter. They also market in vegetable oils. Wheat prices reached their highest level since 2012. Corn prices have also skyrocketed. Soybeans, which sometimes trade in combination with maize, surged as well. Egypt and Turkey are the two largest purchasers of Russian wheat. They will not, however, be the only ones affected if its supplies are delayed or tariffs block exports. This season, Ukraine still needed to export 15 million metric tons of corn and 5 million to 6 million metric tons of wheat. Buyers, including China, are now turning to Europe and the United States to fill the void. If the war continues, the already few supplies may become even more scarce. Another potential headache for farmers: Russia is the world's largest producer of ammonium nitrate, a key component in fertilizer. The price of metals used in a wide range of consumer items is skyrocketing as investors measure the impact of the invasion and consider if sanctions will influence supply. On Thursday, aluminum prices in London reached a record high. Russia's Rusal, which has previously been blacklisted by the US, is one of the world's largest aluminum manufacturers. If more sanctions are enforced, prices may surge. Prices were already high because European smelters had to reduce output due to rising power costs. Even if Rusal is not sanctioned, the recent increase in energy costs may worsen the condition. Of course, the scenarios mentioned here do not define the potential. They're focusing on the world's most sophisticated economies, but commodity price surges will affect countries throughout the world, including food essentials like wheat and electricity. Some countries, such as Saudi Arabia and other Gulf oil exporters, may profit. However, for most developing nations, which are already experiencing slow recovery, the combination of rising prices and capital outflows may be catastrophic, exacerbating the risk of the post-COVID debt crisis. Turkey, a major energy importer with a sinking currency and soaring inflation before the Ukraine conflict, is an extreme case. A tense standoff, a firmer Western response, and restrictions to Russia's oil and gas exports would result in a greater energy shock and a severe blow to global markets. This would likely rule out ECB rate hikes this year, while Fed tightening would slow or stop. In the worst case scenario, Europe's gas supply would be cut off, sparking a recession, while the United States would see much tighter financial conditions, a larger impact on growth, and a noticeably more hawkish Fed. But one thing seems certain: among major economies, Russia will bear the worst of the damage. The cost of President Vladimir Putin's imperialism foreign policies will almost definitely be a shrinking country's economy. Wars are inherently unpredictable, and the actual conclusion will very certainly be messier than any of these artistic portrayals. The wild fluctuations in financial markets on Thursday reflected the uncertainty. Nonetheless, the scenarios should serve in shaping thoughts about potential future courses.